Morning, everybody. It is 8:15 a.m. and it's March 9th. Welcome to my channel. Oh boy. So this Iran and U.S. tensions getting pretty nasty. Talking about production curbs and oil, the Strait of Hormuz being blocked off, bombings, just is nuts, crazy, 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 crazy. What's going on? Crude shot up almost to $120 a barrel. It's pulled back quite mightily. Has pulled back. It's to like 101 right now. Remember, I kept talking about crude. How you don't want to see this over $100 an hour, $100 a barrel. Went up to 120. So um, this market is going to be nuts today. Okay, it looks like the VIX is starting to drop off. The VIX is probably up over 35, I would think. We could look at the chart later. Just roughly, when the VIX goes to like 32, that means that there's a 2% expected move, plus or minus, in the S&P 500. Okay. Now, we were trying to trade at a 26 VIX on Friday. Very, very whippy. Okay. Now, it's even more volatile. So, this is where you have to start taking into account for risk. Either if you're an NQ trader, switch over to the micros, the MNQ. If you're still, because that freaking thing is going to be a monster, trade the ES. The ES will most likely move like the NASDAQ did for you. Okay? This is going to be wild. And then we're gapping down. We have taken out, we have hit. Morning, Mark. We have hit a key swing level to the tick almost, like 68. I'm sorry. 65.86 about. Let's call it 6600. We'll go over that in a little bit. So a very technical level has been hit. All right. We finally broke out of this consolidation. Now, this war will not be here forever. I keep talking about that. So what the market has to do is price this in. So you're going to look at higher inflation, right? Because of the crude, crude going higher. Okay, that's going to hit the gas tanks, and then how everything else works, right? Fuel for airplanes, everything's made off of crude oil. That's why it's liquid gold. Okay, plastics, so many things come from that. It affects everything. Okay, now that's why the Fed, when they look at like core PCE, core CPI, because it excludes food and energy, because they can't control that. They have no tools to control food or energy prices. All right, so they don't have control over this. This is going to give the Fed a weird dichotomy to look at. We just had unemployment go up. We just had jobs miss huge, right? Now, generally, with the unemployment like that, it will make the Fed possibly want to make a cut. However, with crude rising like it is, and you don't know how long this war is going to last, this could cause inflation to go up, which the Fed would not want to cut. Okay? When inflation's going up, it's not good to cut. So who knows? You know what I mean? None of that really matters to me. This is just a story because I'm going to trade where price goes anyway. Okay? This market's going to be difficult today. Large gap, but we're starting to try to close that gap now. See what I mean? Oh, let's price in this war and let's get back to business, because eventually what will happen is, how much more can the market get shocked? It won't. If this continues, we'll look at it in the rearview mirror, because now it's priced in. Okay? Okay. I mean, as I'm looking at it, the market's looking to fill the gap already. So it's like I said, every time this happens, you have to understand markets price stuff in. It's not for us to react to the bad news we already know about. Now it's priced in. The market could go higher now. I don't know what else we could say in the news or find out that would change like what we don't know already now. There's going to be supply disruptions with crude. The Strait of Hormuz is going to be cut. That's going to affect oil. It's not good. It's just how long does this stay like this? Okay. We finally broke out of this consolidation, but look, people might see this as a buying opportunity. Like I said, war like this doesn't stay. It just the market prices it in and it just can't stay as a something that's going to keep pushing markets lower. Does this war really affect Microsoft or Nvidia? Not really. You have to think of it like that. All right, give you a lot, hit you with a lot. Okay, it's going to be wild today. All right, let's get into it. Welcome to my channel. My name is Steve Gonzalez. I use market profile and buying profile to find structure in the markets. Long supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day. That is my edge. Also use market internals. That's my bread and butter, my baby. Anchor view ops. Okay, a little ICT in there. My weekly expected move indicator. Whew. You know what that says today? This week in the S&P 500? Expecting a $30 range. $30 range this week. That's all I'm saying. Buckle into your seatbelts for this week. It's going to be nuts. Okay? It is going to be nuts. Now, hopefully, you join me every morning. Give you the market story, the economic calendar, the leaders and the laggards, technical analysis, and I give you the long and short trade scenarios and NASDAQ and ES futures every morning. Okay? If you want more in-depth coverage, you're going to join my Discord, Confluence Trading. Go to my YouTube homepage, click on the link, and sign up. What are you waiting for? Let me be your indicator. Now, over the weekend, I'm still making changes to this Discord. I want to make it, for myself and for community, more of like a place to look at of like what I'm seeing, right? Because I've been going live every day, and I'm dropping golden nuggets live, and then I don't have like time to then go post, right? So what I work with my AI assistant this weekend, and it's a work in progress, then I'm going to try to have that in the community. Okay, so I'm going to have my bot prompt me, reach out to me, and I'm going to answer what I'm seeing in the markets. And then I made a new channel called Daily Receipts. All right, that I'm going to try to put my pre-market feelings on there. Then I'm going to give you guys my intraday based on internals and also what I'm seeing in the session. And then eventually it's going to trigger a setups that I look for myself that I already know, but it's just a good thing to have. And then for my community, right? Because if you're live with me every day, and I know the community members that are live with me every day, right? They know how I look at markets. I look at the environment that we're in, right? That could be from the last week, from the last month. Like, what's the environment? And then what do I look at? Then, obviously, technical levels, pre-market. Then I give you our pre-market scenarios, right? They've pretty much been spot on every day, right? Then once the market opens at 9:30, that's where my market internals come into play. Okay, because nobody knows until the market opens what's going to be driving the market. I don't know if tech's going to be weak, if tech's going to be strong. I have no clue. I don't know how ticks are going to be. I just don't know, right? So with that information, that gives me usually my bias for the day. And then what happens is, how is the day shaping up? Do we have a bullish imbalance to the profile? Do we have a bearish imbalance to the profile? Is the profile look balanced? Are we in supply? Are we in, demand? Are we by a major level? That all then gives me a new plan for the day. And I'll say to my community, hey, listen, I'm looking for any pullback here. I'm looking for a sweep here for me to go along because of this, 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 and this. And I'm going to try to basically templify, if that's even a word, with the help of my bot. It's going to send me these questions. And I made it have it give me these questions with like things I can click, like buttons that will then, it will be quicker. I will just click, 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 and then give my color commentary on it. Okay, so just to show you, and like I said, this is like kind of in beta because I'm just going to do it today. This daily receipt, okay, right here. You can see I have a little description here of what it's going to be. Like I said, it's like a beta. I'm going to try, and hopefully, like I said, it will have a track record of how I say what the market's going to do and what the market does do. Okay, the only difficult thing with that sometimes I'll have an analysis for, like, let's say the first half hour of the market. Then maybe something changes in the next 15 to 30 minutes. I might look at internals and they're totally different. That happens a lot. And in this VIX environment, the market could change on a dime. Okay, so I'm gonna try. I'm gonna do this. It's for myself. I'm also gonna have my bot track my stats, meaning like what my analysis, my technical analysis on the market is. I'm pretty much spot on every day. I don't really get surprised. To me, this doesn't matter. We're in a 30-something VIX. It doesn't make me go, oh my God, I don't know how to read this. It's going to be same. It's just going to be when you're in a trade, it's going to be super volatile. Okay? It doesn't change how I read the market at all. It just means the moves are more exaggerated. Okay? Enough with that. I just wanted to share you guys with that. I'm trying to, like I said, I'm trying to give the community more like information because I've been live lately every day and I'm giving out the nuggets, right? But I don't have anything substantially shown on my Discord, right? Because in the past I wouldn't go live every day and I would be posting. Okay? It's a lot to be live, talking, trading, and then post, right? All right? Now, with that being said, let's get right into futures watches because it's nuts. It's nuts. Look at that. Crude was up to 119, I believe, 58. So that's $119.58 a barrel. That has since come down. We're at 100 now. Okay, so that was probably the initial reaction. Maybe people took profits in futures. Okay, so crude was at 50 something dollars a barrel not too long ago. Okay, now VIX is at 30.72. This is going to be a very volatile day. It's up 4.17%. Like we said, we can look at that in a little bit. It was probably up to 35, 36, I would assume, when we were like dropping down, okay, in the overnight. Ethereum up 1.21. 10-year yield is up 0.68. The dollar is up 0.28. Bitcoin is flat. Interesting. 30-year bonds being sold. Silver down 0.37. Now the dollar is going up. So it's affecting metals a little bit. Gold's down 0.1, ES down 0.83. So the market's come back a lot, even from when I just started talking. A lot. So this is where it's going to make the market difficult. Okay. Nasdaq's down 0.8. Nothing's down 1% except the Russell. So the Dow's almost down 1%. Russell is down 1.39. Now why is that? The Russell, he's more rate sensitive, so the 10-year yield is up. Russell's more rate sensitive. Okay. Now, moving on to the Mag 7 Plus. How is this affecting our stocks? Well, let's find out. Well, you got Coinbase. This market is ripping right now. This market is ripping. I don't know if something was said, but we're about to go into the gap. It's nuts. This market's nuts. All right. Now, Coinbase is the leader. It's down. All right, so we're going to go to the one percenters that it's down. Meta down 1.06, Google down 1.16, Amazon down 1.18, Netflix down 1.24, JP Morgan down 1.24, AMD down 1.31, Tesla's down 1.41, and Boeing is down 1.67. Top sectors. All right, no surprise here that Chevron and Exxon are at the top, up 0.7, 0.65. We'll go down to the one percenters. We got Salesforce down 1%, Visa down 1%, Goldman Sachs down 1.15, Uber down 1.16, Caterpillar down 1.31, Palantir down 1.31, and in the mining stock NEM getting hammered down 3%. Moving on to sectors. Okay. Energy, no shocker there, is up 1.24%. Now, one percenters, let's go close here. XLK, almost down 1%. That's the largest market cap. Okay. Financials, down 1%. Second largest market cap. Discretionary is the fourth largest, down 1.04. Basic materials, that's your metals. Materials, that is your laggard this morning. Okay. That is your laggard this morning. Okay. Moving on, we're going to go to the economic calendar. Is very light today. There is nothing that's going to really move markets today. Okay, we have we really don't have much. 11 a.m. consumer inflation expectations. That is a 1 star. Some auctions here, some T-bills. Not much to talk about there at all. Okay. Moving on to, let's see if there's any Fed speak today. This is, let's see. Nothing really here either. We already know the Middle East. Okay, Trump's schedule. 8 a.m. President begins executive time. 10 a.m. out-of-town pool call time. 3:30 President participates in a roundtable. And 4:35 President delivers remarks to the public and members issues conference. Okay, none of that right now. Let's see if he gets live or something is too crazy. Let's see if there's any roundtable with stocks this morning. I don't see anything. Okay, let's go to here. Iran's choice of Mohabba Khamenei appears the close path to swift end to close path to swift end to war. Oil soars. Iran named Mojtaba Khamenei to succeed his slain father as supreme leader, signaling that hardliners remain firmly in charge and appearing to close off any path to a swift end. That's not probably good. Okay. Trump's China visit likely won't yield breakthrough, aims to maintain stability. Trump meets defense executives, touts production boost at U.S. strikes Iran. U.S. President Donald Trump met executives from 7 defense contractors on Friday. He announced in social media posts as the Pentagon works to replenish supplies drawn by U.S. strikes on Iran and other recent military operations. I don't think there's really Hims actually the big news this morning. They were going to get sued by Novo Nordisk. Now they partner with Novo Nordisk. The stock is up 50.38%. It's up to $23. It was down to 15. So that's one news. That's pretty decent. That's about it there, folks. Should we look at breadth? How that fared? I think we should. Let's look at it. All right. So this is our breadth. So the percentage. Let me see if I can. Okay. The percentage of the stocks above the 50-day moving average is only at 45%. You can see this weakened. This breadth weakened a lot. Okay, on Friday. So that is a sign of the overall market getting weaker. Okay. Now, if we go to the bullish percent index, remember I like to look at that. Remember, there's a percentage of stocks on buy signals in the S&P 500. That also has weakened on to 50%. Now, 50% is in the middle, right? But you can see it weakened. All right, NDX. Let's see, NDX and technology has been catching a bid a little bit. So, yeah. So you can notice that it's up more than the overall S&P 500. Why? Because software and technology that was getting beaten, people rotated into that a little bit. Okay? Now, if we go directly to tech, which is this bullish percent index, it's still a little weak, 46%. You see, when you're really weak, you're down here. And it's all that means is the percentage of stocks that are on buy signals based on a point and figure chart. Don't worry about what that is. All you got to know is whenever you have a low percentage of buy signals, that's when you know you probably should start buying the market. All right, when you get really into this 85% on buy signals, you know we're pretty frothy. That's all that is. That's all we do to look at that. Okay? That's the breath check-in. Now, moving on. We're going to look right at what? Market internals. The bread and butter of my operation. Okay? This is the market internals recap of Friday. Now, Friday was a little whippy. Okay, now, in the beginning of the day, in most of this session, technology was the leader. Okay? And I had a frustrating day, boy. But did I have a frustrating day on Friday? I was in a short. I think I was, I don't know, a couple trades, break even. And then I was in a short and I got knocked out for break even. Then I came in and I believe I took a long here. I did. Went to break even and I think on my stop my order was right here, like on VWAP. That was my break even. It tagged my break even by a tick and went right up to my target. Wow, the frustration. And that's that volatility. So I have to adjust to that volatility and can't go to break even too quick. Because like even though I'm in a trade, I could go up to 15, 14 points of excursion. It can go all the way back to my entry and then take off, which has been happening to me constantly. So I have to adjust that. Later on, I did catch a short in my personal account here. I did catch another short in futures as well, but this killed me. This was a monster trade that literally went to my entry and took off. Like that was very frustrating. So the internals basically they were overall weak because we had a gap down. Okay, they were weak, but the day the market internals were strong. So this is really important. Okay, because this is what I go by off the open because that's what drives the market off the open, not the previous day's close. Because if you look at previous day's close numbers, which a lot of these are based on, you would think, oh my God, we're going to fall out of bed. It's bad. And we just got bought, right? It's very important. Very important. That's your market internals recap. So bottom line was the market was not weak off the open. Okay? That's why this, I call it the WAD, the weighted AD indicator, is crucial to how I trade. Now, in a VIX of a 32, this thing comes less reliable only because the market can flip positive to negative like that. It doesn't give you time to adjust. It doesn't give you any time. So it makes it a little more difficult. Okay. Now, we're going to get right into daily charts. Okay. Right into daily charts. Give me 1 second, folks. Give me 1 second. All right, I'm back. All right. So, let's look at these daily charts. I don't know if I put this up yet. So, now we can zoom out and see what we did this morning. Okay. Now, we had like a kind of a doji in a way. I know it's not like a real body of the candle is not, but it pretty much is an indecisive candle, right? And what we did is we opened up here, right? And sorry, we looked up here and we hit the previous month's lows. And then at the end of the day, we sold off. We went to this swing low here, right? And then got bought up again into the close. Now, pre-market, okay? Let's see where we went. Now, let me change my chart here. Let's go to a 4 hour. I'm in a 3 year one day. Okay. Okay. So, pre-market. This market went all the way down to the low of 656.8. 656. That is crazy. Okay. So, 656. Now, in the SPY, it went all the way to this demand zone here. That swing low right there. Okay. Hit that, bounced off, and you can see where the market is now. Actually at that, I won't count that because of the time, okay? But that's where we're at now in SPY. Okay, so way down there, 656, came back up, got rejected, and now we're going to go back to the chart I was just in, which would be here. And let me change this time frame to 3 years because that's what I have on there. 3 years. Okay. Okay. So, which is insane, look at where we closed, okay? All right, and this is important. Like we closed up here, fine, but we came down to this kind of swing low. Okay, that's a spot that makes sense, right? Look where we were. 200-day moving average is where we pushed off. So pre-market, we hit the 200-day moving average. Light jacket. All right, so we did hit the 200-day moving average this morning. People bought the heck out of it. Okay, we hit all the way down here. Now we're at 665. We're here now. Look at that. So we're halfway between the lows of the SPY and where we went pre-market. Okay, so wow, right? Now I want to show you. Look at the friggin' support here in SPY. Pretty major support about 652, 653. Okay, major. Look at this support here. That is something else. So the market kind of went there, right? It's never exact. Went to the 200-day and bounced. Wow. Okay. Now, futures. Futures. Look where we came. Now, see if futures is different, right? But look at the accuracy. You came down all the way to this exact swing low. 65, 65, let's call it 6,600. And pushed. It went right to these key support levels, which is a major support. And also, what would that be? If you were short in the overnights in futures, my profit's going to be taken right at this level. That's a big hammer candle now. Okay. Now the we're very volatile, but that signifies right now that a lot of shorts are probably out. We just priced this war in. Now, my expectations here would be to close this gap around 67.15. Okay, it's going to be wild. Trust me, it will be a wild ride today, but we came down to technical levels. That's my point. Okay, technical levels. Let's look at the Qs. Qs has this mess, right? And in what we had in futures was this 249 level that I talked about. I said, hey, this 249 level, we're not going to get through that too easily. We didn't. Okay. So, and what was it in the Qs? Well, 20-day moving average, 90-day daily. That's where we came up. Have this kind of inverse hammer here, candle. You can see we basically stayed within the previous week's range in the Qs. However, we are currently at 592. All right, right here. But however, any money, we went past this 200-day moving average. Let's just look at that real quick on a 4-hour chart. So the 4-hour chart shows us there's a swing low from the past. We went down to a low of 583.77. So 583.77. 583.77. I'm just changing this. Boop, boop, boop. So 583.77. So we crushed that 200 moving average. We were all the way down here. Okay, where close to the swing low, right? So bounced, and now we are at 592. We're back above the 200-day moving average. Okay, so you're pretty close to last month's lows. You're right around here. So you sold off pretty deep. Now you're up here. Okay. Let's look at futures. Okay, if you back up futures, look what we did. We took out, look to the left, this swing low. Right there. Around 24144. Look, that's last month's lows. We're back inside last month. We're back inside, believe it or not, last week's range. Like I said, what does this mean? You're back inside this. That is, I'm telling you right now, what I'm seeing is I expect us to move up. I expect us to possibly even move up and try to fill this gap here. 24593s. I mean, this pretty signifying. We just swept all our liquidity and we're back up here. I mean, like I said, at a 30-something VIX, the price action is going to make you feel something, but you got to step back in a larger time frame and see, don't let that small time frame influence you too much. It's not easy to do. Okay, it's not easy to do. So this to me looks like we want to go higher. Okay, that's a monster buying excess wick. All right. All right. I think we can move on here to hourly charts. Hourly charts, and we just saw some stuff, so we don't have to go. Oh, what am I doing here? Oh, sorry.